Investing in buy-to-let property is one of the fastest and surest ways to achieve financial freedom, but it is not without its dangers.
If you're in two minds about investing in property, then some of the dangers in this video might confirm your fears that it's not for you. While those of you who have run the numbers and realised buy-to-let's potential, the high investment returns might push ahead regardless. Now aware of the dangers and how to manage them.
If you're a Corbyn fan, you will be triggered by this video. We're a money channel, not a politics one. But we can't do a video about the dangers of property investing and just ignore some of the madness that is coming out of the Labour Party recently. But we'll give the Tories their fair share of a kicking too.
I'm still buying rental properties because I understand the dangers of buying. And more than that, the dangers of doing nothing. Let's check it out.
Welcome to Unshackled.com, the investment channel and website that sets you and your finances free. I'm Andy, this is Ben, and if you like what we say, hit the like button and click subscribe. Also, on Unshackled.com, there's a ton of investment articles on there that you can read while you're bored at work. And we have hundreds of pounds of welcome bonuses that you can snap up if you sign up to one of the investment platforms listed on the offers page. The link is in the description below. Let's get into the video.
Danger number one, the government. By far the biggest threat to the UK buy-to-let sector is the meddling of the UK government and its devolved bodies right down to the county council level. The last several years that the Conservative Party have been in power have seen a ton of unconservative measures put in to punish landlords and property investors in a bid to make the Tories appear nicer to younger voters.
The problem that the Tories under David Cameron and successive governments were trying to solve was the housing crisis, the growing problem that young people cannot afford to get onto the housing ladder.
Their answer has not been to build more houses, but instead to punish landlords and property investors with ever higher taxes and anti-profit regulations, including the 3% increase to stamp duty tax, the tampering with mortgage interest as a deductible expense, and new rights for tenants, making it much harder for investors to be able to create more affordable housing despite ever-growing demand for it.
Meddling policies have backfired. As a side note, it is the cash injection by buy-to-let landlords that keep streets of houses in good condition over the years. Most homeowners can't afford to renovate ageing houses to keep them from falling into ruin, but an investor can and will if there's a profit to be made.
The incentive of profit from a working rental market keeps housing stock in peak condition. The government should keep that in mind if they seek to limit investors' profits further. They claim that they want people to live in high quality housing, paid for by necessity by landlords and property investors, and yet they seek to tax landlords until it hurts. They must soon realise that they can't have it both ways.
Communism in the UK. By their own admission at the Labour 2019 party conference, by far the biggest destroyer of investor wealth and aspiration would come from a Jeremy Corbyn-led government.
Along with general rises in taxation that would limit most investors' capacity to invest and store wealth, the Labour Party under Jeremy Corbyn has also said that it would allow tenants of private buy-to-let properties to forcibly buy those properties from the landlords, even possibly at below market rates. This will be forced sales of assets at a loss. This is nothing short of theft, and the once proud Labour Party should be disgusted with themselves for allowing such a policy to exist. Right of ownership in the UK is one of the main rules holding the UK economy together, and is what gives foreign investors the confidence to invest in the UK. But if the UK government can take your properties, they'll think, what else can they take? Well, another Labour policy under Corbyn is nationalisation of various industries, so they can take your shares too. We say this because there is just no way that the government could afford to buy back all of the shares in the energy and rail companies at a fair market price. You would effectively be robbed by the difference between what they are willing to pay you for your shares and the fair market price.
We can't describe a policy of forced sale of assets at below market prices as anything other than state-sanctioned theft and communism. And this is now the biggest threat to investing in the UK, especially the buy-to-let sector. Why we're not overly worried. Although the thought of a hand-in-your-pocket Corbyn-led government terrifies us, we don't think it is likely that he could get a majority in Parliament that could push through some of these scarier policies.
If it were to happen, the imminent collapse of the rental sector and the vast homelessness that would surely follow as landlords kicked out their tenants would certainly pour cold water on this and similar policies, and hopefully common sense would soon return. It's one thing to announce a loony policy at party conference, quite another to enact it.
Danger 2. Interest rate rises. Higher interest rates would be a blessing to savers, but to investors it would be a curse. Property investors make more money when interest rates are low, as buy-to-let mortgages are very cheap.
A 1% increase to interest rates would have a negligible effect on savers' wealth, but would have a huge impact on property investors, as their buy-to-let mortgages would become potentially hundreds of pounds more expensive. Fortunately, the Bank of England knows that mortgages, credit cards and other debt would be much more greatly impacted than savings as a result of a rate hike, and so they are very cautious about doing this.
The US and the EU both recently decided to lower interest rates, and the Bank of England decided to keep them frozen in the UK at current levels. The general trend in the world is therefore towards lower rates for the foreseeable future, so it is not an immediate threat.
If rates were to rise in the future, rents would also need to rise to meet the extra cost to landlords. If you buy property now, we feel there will be enough time in order to gradually raise rents without hurting tenants, in time for the inevitable rate rises that must come some year soon.
Danger number 3, recession. Both a danger and an opportunity. The risk from a recession is that property prices crash. The opportunity from a recession is also that property prices crash.
For the properties that you own in your portfolio, it is obviously not a good thing if the value of those properties falls to below the amount of the mortgages, as this puts you into negative equity and the banks may not want to lend you any further money.
But if you have the cash to make your move, the market would suddenly be full of bargains. Low-price houses ready to be snapped up on the cheap. For long-term investors, as you should be as a buy-to-let investor, momentary drops in house prices shouldn't worry you over much. Prices will go up eventually. Remember, it's not really a loss unless you sell.
Danger number 4, being too scared to start. For us, bigger than any other danger is the danger of being put off of property investing by dangers 1, 2 and 3. A recent comment in our YouTube comment thread summed this up for us perfectly. I'm more scared of working 40 to 50 hours a week until I'm 75 than an interest rate rise. Shout out to Ryan who came up with that gem.
If you invest in property with a 20% plus rate of return, then you could be retired in less than 10 years. Flip that on its head. The cost of not investing is slaving for another 40 years working in an office or behind a till. Do you really want to take that extra risk?
We don't. We can't. And it's the main reason why we invest in property still, despite the risks. We'd hope that common sense will prevail over the communist policies of forced property sales, and that interest rate rises will be offset by rises in rents over the years. And finally, that any recession will be temporary and present as many opportunities as it does risks.
Balance your portfolio by investing in the stock market, peer-to-peer lending and other paper assets, but don't let the fear-mongering around buy-to-let investing distract you from earning those life-changing returns. The cost could be unthinkable. Remember, don't wait to buy property and wait.
Question of the day: what scares you most about property? Let us know in the comments below.
Thanks for watching! On this channel we talk a lot about personal finance, investing and all things money. And if you want to see more great content, please click the subscribe button below.
This is MoneyUnshackled.com. See you next time.